So now it's time for our panel discussion. The subject is capital in Baltics. So our host, Rokas Pečulaitis, is a big fan of TV series called Lost. So he's lost and a bit late. So position of the host and of the moderator has shifted to Andris Berzins, Change Ventures Latvia. Also participating in discussion is Rein Lemberpuu, Contriber from Estonia, Tomas Andriuškevičius, Practica Capital, Darius Žakaitis, Contrarian Ventures, and Rokas Tamošiūnas, Open Circle. So please welcome our members of panel discussions, our participants on stage.
Hello, everyone. You hear me? Yeah? Okay, mics are on. Because Rokas is late, we can talk about whatever the hell we want. So we decided what we're going to talk about. But the first thing is, you guys just heard me present, so I think you know who I am. But I'd like to ask all the other panelists to give a quick introduction to who you are, your funds, your kind of investment sizes, stages, and so forth. If you can start with Rein.
Yes. Hello, everyone. Can you hear me as well? I'm Rein Lemberpuu from Contriber Ventures. It's not a fund. It's just two angels investing our own money. I'm investing in tickets from 25 to 200,000 euros. Currently done 21 investments. Most active angel investor, I think, at least in Estonia. And currently also running the ESTFAN, Estonia Business Network, as a president. Yes, that's pretty much for intro. Yeah.
Great.
Hello, my name is Tomas Andriuškevičius. I represent Practica Capital. We're a local investor. So far we have made 42 investments. Currently we're raising 50 million. Another fund will be investing from $500,000 to 2 million plus. Across various stages from seed to Series A and probably later.
Hello everyone, my name is Rokas Tamošiūnas. I'm a partner at Open Circle Capital. We're a fund based here in Lithuania, in Vilnius. We're 20 million in size. We are focusing on early stages, so seed, angel, pre-seed. Slightly later than that, we're looking in investing between 1 and 300,000 euros into companies at the first investment, but we can go up to 3 million euros in investment. We're looking for deep tech, smart founders. So for the technology, we prioritize artificial intelligence, air and space, or aerospace, if that's what you do.
Hello, everyone. My name is Darius Žakaitis. I represent like two organizations. Contrarian Ventures is a VC fund specializing in energy sector. We invest in pre-seed, seed stage from, let's say, 100,000 to up to 350 ticket size, and we have a mandate, pan-European mandate, so all countries from EU is in our target. Also, we run one energy accelerator, and we kind of a tailor-made accelerator program, and tickets from accelerators up to 50,000 euros.
Great, thanks. So the first question we wanted to discuss is sort of capital availability. So is there more money now as investment money from investors in the Baltics? Is it growing? Is it declining? Sort of what's the sense? And in particular, Rein, maybe start with you on with a focus also on the Estonian side, but then I'd like to hear the Lithuanian view and any pan-Baltic investment money. How is this changing? How should startups look at this?
Estonia capital markets are definitely changing at the moment, because I think from this year there's like doubled the amount of funds that are functioning or operating in Estonia, and the amount of capital, I would say, from the funds is 120 million plus at the moment, and there is obviously a change because most of the funds are actually now done by the angels. So they are previously angels, now they became VCs. So there's definitely some changes in the dynamics, which we don't know yet how it will affect. But what we also saw from last year angel statistics is that there was a growth of angel investments from 9 million in 2016 and to 11 million in last year. So at least from Estonia's perspective, I would say that there is more capital available than ever.
Yep. Go on. Tomas.
In Lithuania, I think this picture is very similar. The amount of funding is increasing, but so far it's increasing on paper because government initiatives to distribute new funding for venture capital funds has taken place. But now most of those new funds are raising the money themselves, and provided that they are successful, the amount available, the capital available for early stage companies will increase two or three times as compared to previous times. Also, the sentiment among other sources of capital, like high net worth individuals, angels, I think it also increases dramatically. The sentiment towards this asset class.
Yeah, and we also saw Litban being founded a few months ago. So now all three Baltic states have more organized angel associations. How do you think that will affect the Lithuanian investment scene in particular?
Yeah, Litban is a big thing. It's good for the market. I think the strongest side of it is it already has so many members, and it's putting a lot of its members on its website, so it's visible. So for you, the founders, if you're thinking, who can fund me? Now you have this very long list of people who can go ahead and have a conversation with you, have a coffee, you can attend events. So there is a lot more going on in the angel scene in the earliest of stages. So that's a big thing going in favor for Lithuanian founders. On top of this, if I'll just add a couple of good things so we end this on an optimistic note. I have a feeling I'll be more critical later in the presentation. So on top of this, we also have a government matching facility that matches whatever the angels do. There has to be at least 3 of them. I think this is a very powerful instrument. So if you're raising more capital, that essentially gives a lot more confidence for angels and the risks, as well as makes investing in you more profitable. So that's a big thing going in your favor, and that catalyzes the early stage investment, I think, greatly. So a lot more angels are thinking about this and thinking about investing in maybe riskier startups than they would have otherwise. And yes, of course, just seconding what Tomas said before, several funds opened up like ours in last year. There's going to be several more coming. Government already announced most of them. I think maybe 1 or 2 is still unannounced, but the others are going to open up. They're going to hit the ground running later this year, some of them maybe next year, and that's going to mean that there's going to be much more capital available than ever before, but also much more capital available for tech startups. We have had VCs before who were later stage, who were private equity, who were looking at manufacturing, that sort of thing. But by the end of the year or at the beginning of next year at the latest, there's going to be a lot of capital looking for technology ventures. So for all of you in the audience, that's a positive note.
A question, do you see any influence from Poland? Because as I see, the Poland VC market is also exploding. There are tens of new VC, small, but VC funds being formed, which is very close to here. Do you see any influence or any change from that front as well?
I can try to answer, because Tech Park is like a gateway to Lithuania. Everybody who comes to Lithuania, we see them. So Polish, never. Sorry. Yeah, it's a pity, but yeah, probably they are very busy in own country, but they are not coming
so actually
to do scouting. Except InnoEnergy is I don't know, pan-European creation of some big utilities and EU funding, and so only Polish chapter are coming and do scouting here in energy sector, but VCs is or I didn't met them, but they are not here.
So there are not many. There's one Black Pearls VC, which is invested in Inslee, an Estonian startup, which is looking around. The challenge that a lot of the Polish VCs have is they have investment money from the equivalent of Invega in Poland, and the strings attached to that money are quite strict, and they want to invest in businesses that are based in Poland. So most of those Polish VCs are very limited in their ability to invest here. But there are some that will. Black Pearls is one, and I think we'll gradually
But you don't
see
see that
them coming.
actually they could attract Lithuanian startups to actually register their company there.
I think my personal view is there'll be enough capital here that won't be interesting. I think the startups that should think about Poland are the ones that, for whatever reason, Poland is an attractive market for, right, early on. So the local Baltic markets are very small. For many startups, it makes sense to focus on a larger market early on. And while Poland may not be the first market you think about, for some startups, it's actually a good first market because it's 40 million people. It's big enough to prove something serious, but it's close by, and especially close for the Lithuanian startups. So that, I think, is the exception. And then if you have Poland as a significant base early on, then maybe it makes sense to do legal structuring so that you can also raise money from Polish VCs and you have more options. That's sort of the one option I see.
What about
Yeah, go on.
Latvia? What about capital?
Yeah, Latvia.
What about Latvia? So Latvia also has more capital coming. So there are actually several accelerator funds. I saw Peters from Overkill here. There are several accelerator funds coming online, each of which will have roughly 5 million to deploy, and that's both initial accelerator money plus follow-on money of a couple of $100,000. So I think that will present a lot of opportunities in the very early stage for startups. And aside from us operating there, Imprimatur is there, and several other funds are getting more money, and so there will be capital available, I think, in Latvia too. So in all three states, I think if you're a startup founder, the next 5 years are a good time to raise money.
And to add from my side, because our main LP is Lithuanian Energy, so what I see, the corporates are becoming more active. Sure, it's a good example from Lithuanian Energy because they were the first company deploy capital into VC fund, but we talk with few others, plus all the banks like SEP and SAB and Swedbank, they are becoming very active in ecosystem, so it's also could be a good add-on to the angel investors, to accelerators, to VC funds backed by government. So corporation, I think in couple years it will be a good and interesting, let's say, player in this market.
Yeah, I think most importantly on the accelerator side. So Startup Wise Guys has an accelerator with Swedbank in Latvia. I think there's one with the telco in Estonia that we're doing an accelerator as well, if I'm not mistaken. So in certain sectors, that can be an advantage and might give you access to a corporate that you wouldn't get otherwise. So what about investments across the Baltics? So is it worthwhile for a Vilnius startup to head to Tallinn to raise money, or to Riga? What are your thoughts about pan-Baltic investments, or is it better to stay home?
I think, first of all, I don't think that the pan-Baltic is any different, let's say, than pan-Nordic. When we're talking about this cross-border investment, I'm also in the board of Nordic Ban, which is the roof organizations, so all the angel networks in this area, 12 of them. And what we thought that the main goal of this Nordic Ban is actually facilitate or kind of boost the cross-border investments. But it's hard as hell. It's not really happening. People are talking about, there are investors who are kind of ready to take a look, but I'm currently talking, of course, from the perspective of the angels. I think it's a little bit more active maybe on a VC, but scale, you can comment on that one. But from an angel perspective, I think if you don't have any connection, let's say you're a Lithuanian startup and you are thinking if you will go to Latvia or Estonia, you don't have any connection there. It doesn't make any sense. You will not get funding. But if you will have, let's say, some Estonian investor on board or some kind of relationships going on, because I think the investing is a lot about relationships, then it might make sense. And especially try to actually find those angels who came here. So if they're already here listening to your pitches here, then that's much higher chance than to actually apply for Eston for a pitching. I don't think it works yet.
Yeah, but I think also, so definitely I think the angel, cross-border investing is different from VC funds. So the funds are trying to be more active in investing across borders. But I think the other thing is, from the startup's perspective, you should be looking for the angel investors based on who is the ideal investor for you. So just like you want to select a fund that's ideal for you, you want to select angel investors who are ideal for you. So I was helping a startup in Latvia that has a hockey robot. They have a robot that shoots pucks and trains hockey goalies. And I found 2 angel investors in the Nordics that have either were hockey players or had connections to hockey that are angel investors, right? And as startups, you can do the Google searches, you can find angels, and you want to be looking further afield, but trying to find the specific people that might be specifically connected to whatever it is you're doing, because A, they will understand the problem you're solving better, and so they're more likely to invest, and B, they'll actually be able to help you much more. So I think that's the other way to think about angels.
Also, I can comment from a VC point of view. You can observe how VCs behave. All Baltic VCs are looking for potential investees across all the countries. So reversing that, it means that it doesn't matter if you're in Estonia or Lithuania, you can come to Latvian investors and pitch for the investment. So I think from VC point of view, it's a single unified pan-Baltic market.
I have a few things to say on this. So first of all, international investments are happening. So you guys at Change Ventures, you've done some investments in the region. I think the first investment you guys made was not a Lithuanian investment. About 60% of all investments I made were Lithuania, meaning 40% were out of Lithuania, and inside that a few were in the Baltic. So it's happening. Karma is a big example. They did an investment in Lithuania not so long time ago. So although that being said, I think that's always been the case. I think for me the most pan-Baltic investment year was 2011 when we did one Lithuanian company, 2 Latvians and 1 Estonian. That to me was pan-Baltic investment, and I think any year since then was as cross-border as it might have been back in the day. So I'd say pan-Baltic investments, there is business as usual. There are some, but no breakthrough here at the moment.
All right, so what about further afield? So when is the right time, and should startups be flying to Berlin, flying to London, New York, Silicon Valley to raise money? Who wants to try?
For the best startups, how I understand, it's it's no reason to fly into Berlin or London, because they are flying here to have a meeting, and now analytics in VCs are very good. And I remember when I was talking with Andris from Oberlo a year ago, he was telling me what they are receiving inquiries every day, because international VCs, they follow metrics, they follow info very well, and they know how are you doing, and what is your attraction, and what is your numbers. So I think it's a first comment. But of course, for some teams, it is really reasonable to to visit VCs in London or Berlin, but like you told, you need to know what you are looking for. You need to find a dedicated investors. Probably, you need to do a lot of research. What I saw from my experience, what teams do not prepare well. They are going to roadshow with Startup Lithuania and they are not prepared. They do not do homework, and meetings are unsuccessful because it's not the right investor, or they not prepare well. So it's big challenge when you coming
you
to
haven't done your homework.
when you are in London, because when we saw pipeline what is coming from London or Berlin is much higher quality compared to Lithuania. I mentioned our mandate, it is European mandate, and we look a lot of companies in these international cities, and the quality is amazing. So it's not so easy.
And also to add to that, the reality of this is that most international VCs are looking for later stages. So if you're raising anything lower than Series A, it will be extremely difficult, if not impossible, to get. And local funds, we have this mission that we support tech companies in early stages, prepare them to next stage financing, and then with local investor presence, international VCs have much more comfort in investing into company further.
But do you think that actually VCs are now coming to the playground of angels or vice versa? Is there any change there?
What do you mean exactly?
By starting to invest earlier, coming to the earlier phases as well, because otherwise you will not be, in the game.
It depends. I mean, on your fund strategy. If there will be some accelerator funds launched soon, and I think those funds will definitely be on the same playground as angels. But VCs like us, I think we're starting to specialize and moving away from a very early stage, and actually looking at angels and accelerator funds as partners who help to de-risk initial stages of the investment.
All right, then what about international accelerators? So is it worth, you have a startup out there, is it worth applying to Y Combinator 500, Techstars, and taking off with the whole team and trying your luck in the Valley or London or somewhere, in an accelerator specifically? What's sort of the view?
No, I think the name of the game is international markets. And we're going to kind of connect these two topics. So us as investors, we have to understand if there is a good startup in the audience at the moment, chances are that startup is already had been contacted by a foreign investor, or they're probably attending an event in London or Helsinki somewhere, and there is a reasonable chance they will raise from other country investors as well. So we are exposed to this international competition. Startups as well are exposed not just on their product side, but also on the fundraising side. So we as an investor, we are approached by startups from Pan-Baltic, from other countries, so on. And if you have a European mandate, then you're looking at the entire continent. So that's a vast competition. If you're a founder, you need to outperform a lot of people. So accelerators. Accelerators very much the same. They are kind of exposed to this competition in two sides. First of all, they're looking at startups from all over the place. If you're a really good accelerator in London or in Berlin, you're looking at a pipeline from all over Europe, from 15 plus markets, something like that. And if you're the best accelerator like Techstars, like Y Combinator, then you really have a global pipeline. So for a founder to get into those accelerators, it's really, really complicated. You really need to be top of the top, the best guy in class. That said, accelerators also compete against each other, right? There are quite a lot of accelerators now in the market. In Europe, there has never been a particular shortage of accelerators. However, there are now hundreds of accelerators that if you do a decent job at Googling, you can come up with maybe 10 industry-specific accelerators just for you, and overall 100 accelerators. That's kind of good. But then look at their track record and look, have they actually produced any successful alumni? How many of those? Is it just one, couple of random successes, or is that consistent level of quality? And I think looking at a lot of accelerators around Europe, I think very small amount of accelerators actually consistently perform well. So that's a big message to the founders. Just because an accelerator based in a sexy place like Lisbon or London or Berlin, just because they have extended you an invitation, come on board, join the program, we're gonna help you, everybody says that. But have you helped the guys before? Look at the track record, look at their alumni, look at their portfolio pages. And some of them are the best thing that can happen for you, but some of them are just not worth the trouble.
Yeah, and actually don't just look at the portfolio pages, but talk to the startups that have been through the program. Like founders will help. So you find some Portuguese startup that has been through some Berlin accelerator, reach out to them on social media, and many of them will be happy to give you a response as to what they really thought about the program.
Especially
and you should do your homework.
Yeah, but it's if we look at this question in the context of investment, then I don't think that the cause or the reason to go to an accelerator should be to get an investment. So it's.
I agree 100%. The reason should be to advance your business model thinking, your readiness for funding, right?
For me, it seems that you are actually buying a network, a connection network. So it depends on which connection network you are buying with equity, which is a quite expensive buy, but that's something that you need to consider. It's the money you will get. It's basically just you will spend the money for the program actually. So it's not a financing option for sure.
Yeah, but I guess the bottom line on accelerators, in my view, is also, I agree with Rokas, they're multiplying like mushrooms. They're all over the place. It's kind of like the university market. There's a real curve. So the very top accelerators, if you get an option to attend Y Combinator, definitely think about it. Techstars and some of the other really good ones, you definitely should think about it. After the really top ones, where the network will be of a lot of value add, then start to think really hard. Is the equity worth it? And of course, the equity-free accelerator in the region is Startup Sauna in Finland, which a lot of Baltic startups have been through, which connects you well into the Finnish ecosystem, and that's equity-free, so that's a totally different trade-off as well. So what about terms? Valuations, liquidation preferences, all of these nasty things that the lawyers have put in the documents. So what's changing in this market in the Baltics and in Lithuania specifically in terms of the kind of terms, the deal that startups are getting?
From Estonia, I can see that actually the valuations are going up. It's not uncommon. Actually, currently there's two programs running in parallel, two Nordic Angel programs. One is in Estonia, and one is in Finland. I'm also participating in both. So I saw like 100 startups from Finland and 100 from Estonia, and I haven't done the math, but my feeling is that average valuation is higher in Estonia than in Finland.
That's interesting. Okay.
Not like double, but it's still, you would expect the other way around.
You would. Any other feedback on valuation specifically?
Well, that's what you get from having so much capital already available. I think that's a direct function of that. So valuations are going up. That's like, that always happens. Like the prices on heating are always going up. So valuations of startups tend to always go up. But in that respect, I think we have it in the Lithuanian market, we have it lower than in Latvian or Estonian market. Also probably a function of some of these funds are not being open to the market just yet. So we have a lot of capital coming, but not so much capital active in the market just now. And obviously, once they open up, that's going to definitely result in bump up of valuations. So in that regard, I think we're still maybe slightly less inflated market on the European landscape overall, which is in a way bad news for founders because you would end up giving up more of your equity, but good news for everyone else, really, because the valuations reflect the real value of the companies closer. So there are less of down rounds, I think very little down rounds. So that happens when first you raise at a very high valuation and then you understand that you need to raise the next money at a lower valuation. So that's quite rare in the market, and that means that the initial valuations were not too inflated. And that can kill a company very easily. Definitely a big blow to the reputation of the company if you need to decrease in valuation. And that's also a blow to investor confidence. So we don't see too much of this, so that's playing in our favor, although I have a feeling that's not going to last.
That's a very good point that Rokas raised, that valuation, I mean, it's not always good that the valuation is very high, because it can damage you later on. Also, another point to add is that don't raise too much capital, because it will lead to similar problems. And the third point is that valuation is not everything. The investment agreement contains many more provisions, and sometimes they can be much more friendly or leading to better cooperation and success to the company than just valuation alone. And from our perspective, the question was about what's changing. I think we've been very modern and founder-friendly from the very beginning, so apart from valuations, the other terms are remaining fairly stable in our investment agreements.
I also think we need to mention that why valuations are increasing, because of possibility to raise through ICO. In ICO is another story.
This is the next topic coming up.
Yeah. You see a white paper, or you see just a presentation, and the guys are asking incredible amounts. So now it's really tricky.
But can we do a moment of truth, really? So we're a panel, we're like 5 VCs here, okay? So name one ICO you would have invested as a VC.
So one of our portfolio companies is doing an ICO now.
Yeah, that doesn't count.
That does count.
So something you missed that you would say, oh, shoot, I wish I would have backed that white paper. Okay, so very little. What about you, sir?
0.
So there is one. Are there more?
No. 0.
0. Oh, sorry. I thought that's a brand. What about you, sir?
I mean, the question is too broad. I mean, there are companies that I think there are genuine cases behind those, but at those valuations, this is the stopper. At those valuations, we wouldn't invest in any.
So I wouldn't have backed any of the recent completed ICOs either. What about you, sir?
V-Power was a good case, yeah, but
at 40 million evaluation, would you have?
No, but now it's 80, yeah, or something.
All right, so fair enough. So out of 5 investors, there is one ICO that we might have backed, and to double the money. So if you're in the audience and you're thinking about ICO and you're thinking about a VC, you basically need to make a call. Either you raise VC or you raise ICO, because somehow these things don't mix.
And they don't mix for the reason that once you raise an ICO, the equity is basically, I could kind of say, worthless, in the sense that because we're an investor in a company, Guana, that is now doing an ICO. And so our position is that we need to have the option to convert our equity to tokens. Because the basic problem is once you launch an ICO, the value creation mission of your company needs to be towards increasing the value of the token, right? Increasing the value of the network you've created. And that is at odds with making profits in a company and increasing the value of the equity. You can't do both at once and execute well. So that is why we believe that the two paths will diverge. But I think life is going to get a little more complicated. And my view on this ICOs is that it will be more like the Kickstarter market. So if you guys remember when Kickstarter and Indiegogo started, in the early days, you could launch a Kickstarter campaign with $3,000 worth of marketing, a quick video, and you could raise some money on that platform. Now, you need a budget of like 50 or 100,000 to break through all the masses of people who are trying to raise money on those platforms as crowdfunding. And so you actually typically will need to raise early money from angels or pre-seed investors in order to finance getting on that platform. And the same thing will happen in ICOs, right? So
isn't it already happening?
I think it's already happening. Yeah,
I
it's
think
already
the amounts
happening.
are already bigger.
But it will happen even more. So a whole bunch of the ICOs that are out there will flame out and die. A bunch of people will get scared because they lose money. It gets harder to raise. Therefore, you need to invest more in order to raise money with an ICO. So I'm actually very bullish about the future of VCs also in the ICO market, because I think there will be opportunities to fund companies. But it is a very fast-changing, emerging space, and it's clear that the two things are connected. But you can't exchange ICO valuation for equity valuation, and the two things don't mix.
So that's that. Do you feel just something more to say about ICO? I want to go back to what's changing.
But good is it affect number of startups in ecosystem very nicely. It's new people are coming in ecosystem. Yeah, I think it's also some positive things.
So I think new things, but I think the other issue is that some of these companies that have raised very large sums in their ICOs basically now have you've got 10 million or 20 million or more in your bank account, and you're like, all right, now I need to hire people. And so the downside for founders not doing businesses where an ICO is a suitable fundraising mechanism is that salaries will go up in the market, because people will start to get headhunted away by at least short-term rich ICO funded companies, and that will lead to higher salaries for other startups. So that's the downside. So
you wanted to come back to the liquidation preferences? Yes, no?
A little bit, yes. The question some time ago was what's changing in the funding. I think one thing that's definitely changing now is the number of investors on a single round. So if we look at deals like what you guys done with Plate Culture and what we've done with Tipi, there are a lot of investors. So was there 6, 8, something like that, co-investors, more than 10 in our case. So that's the rise of angels, where more and more people are willing to participate. And in the earlier stages, particularly if an institutional investor is willing to lead, like a VC is taking the lead position in investment round, I guess all of you have an opportunity of inviting one or more, or probably several angels joining you. And that's, again, good for you. There are more investors. So if I, as an investor, if I don't feel like investing more than a certain amount of money, but you actually need a little bit more or a lot more, you can raise that from many other investors who will be more confident in the round, because, okay, now this is what the market looks like. So we're seeing more and more deals like this, particularly this matching facility that requires at least 3 investors to be part of the deal already. So we'll see all these deals done by at least 4, because matching facility is the investor number 4. So that's changing already. So I think that's for the better. More people are involved, that the risks, the deals, and that gives more capital available for you, the founders.
So you are seeing more syndicates in
Absolutely.
Lithuania. I think in Estonia there is no change, because for some reason this has been the practice from since 5 years already. So I think the average number of investors in an early deal is 5 plus. Yeah.
So I think that's all we have time for. So I think these guys will be around. You can catch us here, and thank you very much. Appreciate it. Thanks for the panelists.
Thank you.